Hey everyone, it's Justin here, America's Honest Tax Accountant from Number Crunch Nerds. So 1099-Rs have started arriving in your inboxes and mailboxes. Form 1099-R is going to report number 1, rollovers, number 2, Roth IRA conversions, number 3, RMDs, number 4, QCDs, and other kinds of distributions from IRAs and other types of retirement plans. So let's break it down with respect to rollovers. What is a direct rollover? Well, a direct rollover is when your retirement money moves directly from one custodian to another and you never touch the money. So for example, you roll over from an existing brokerage account, this could also be a workplace plan, and you roll over directly to another custodian. You personally are nowhere to be found within this transaction as far as who touches the money. So for direct rollovers on your 1099-R for pre-tax accounts, i.e. traditional IRAs or 401ks, you are going to see distribution code G that is specific to direct rollovers for pre-tax accounts. If we are talking about after-tax accounts, i.e. Roth IRAs or Roth 401ks, the distribution code you're going to see on the 1099-R is code H. Again, this code is specific to direct rollovers for after-tax accounts. Okay, now what is an indirect rollover? Well, an indirect rollover is when the money is distributed to you first, and then you have 60 days to deposit the money into an equivalent account at another broker. So for example, here is your Fidelity IRA, or this could be a workplace 401k, and in either case, the plan will distribute the money to you first, so you have the money in your hand, and then within the 60-day time period, you have to put it into another equivalent account over here at another broker. Okay, now with respect to indirect rollovers for pre-tax accounts, on your 1099-R, if you are under age 59 and a half, you should expect to see distribution code 1. Distribution code 1 is an early distribution for which no known exception is available. Alternatively, if you are over age 59 and a half, on your 1099-R, you should expect to see distribution code 7. This distribution code indicates a normal distribution. Now you might say, okay, wait just a minute here. I'm doing a rollover. Why would it be classified as either a normal distribution or an early distribution with no known exception? Isn't a rollover an exception to getting taxed? And the answer is yes, a rollover is an exception to getting taxed on the distribution of money from your pre-tax retirement accounts. However, there are two important things to note. Number one, an indirect rollover is not an exception for which there is a specific code that will appear on your 1099-R. Okay, but why? Why is there not a specific code for that? And the answer is because the custodian has no idea what you're going to do with the money that they just distributed to you. You might get that money in your hot little hand and run off to Vegas to play the slots. The broker doesn't know and has no control over what you do with the money. It is up to you to get that money deposited into an appropriate account within the required 60 days. And if you do that appropriately, then number 2, the indirect rollover is an exception which occurs by you telling the IRS that you did a 60-day rollover regardless of what the code says on the 1099-R. And of course, how do you tell them that you did the 60-day rollover? You tell them on your 1040 tax return by indicating that you did a rollover. Okay, but now what if the indirect rollover relates to an after-tax account? Okay, with respect to indirect rollovers regarding after-tax accounts, on your Form 1099-R, if you are under the age of 59 and a half, you will likely get code code J, which is an early distribution from a Roth IRA where no known exception exists, and the concept will be the same as what we just went over above in the pre-tax accounts. You have to inform the IRS on your tax return that this was actually a rollover so that it in fact doesn't get treated as an early distribution with no known exception. Alternatively, over here, if you are over the age of 59 and a half and 5-year clock number 1 with respect to Roth IRAs is satisfied, then you should expect to see distribution code Q, which is a qualified distribution from a Roth IRA. If you are over the age of 59 and a half and the broker does not know if 5-year clock number 1 is satisfied, you may get distribution code T, which relates to a Roth IRA distribution where it notes that an exception may apply, but the broker is still not going to know if you are doing a rollover in this transaction, and so your identification that it is a rollover on your tax return will still be required. And then finally, if we're not dealing with a rollover from a Roth IRA, but rather a designated Roth account within another account, for example, within your 401k, there could be a designated Roth account portion in there. If the rollover is coming from an account like that, you should expect to see distribution code B on your 1099-R. Now, once again, despite all of these different codes, what is the common denominator in all of this for what we are talking about in this video? And it's that for an indirect rollover, the broker doesn't know what you're going to do with the money once it is distributed to you, and therefore you have to tell the IRS that you did a 60-day rollover when preparing your tax return. By the way, in order to get everyone organized and ready to go for the 2026 tax season, my fully updated 2025 tax prep / 2026 tax planning information organizer is now ready and available for download. The tax organizer is available to all of my viewers and contains over 197 tax questions and related guidance to help you get all of your tax ducks in a row during the 2026 season. You can find a link to download the tax organizer in the description below this video on YouTube. In addition to that, my 2026 tax season prep and planning class launches February the 1st, 2026, and will be running through April the 15th, 2026. This 10-week-long intensive tax class will dive deep into the world of both tax preparation for 2025 and tax planning for 2026 and beyond. You can find a link to the video FAQs about the class at the link in the description below this video. So that's going to be it for today's video. Thanks everybody for watching, and I'll see you next time.